Hello traders everywhere, Adam Hewison coming to you from the digital studios of MarketClub, and we're going to be looking at two stocks today that announced their earnings after the bell. Those stocks are Google and Microsoft. We'll be analyzing these markets and we'll be showing you exactly how we stand before the earnings come out. So let's go to the stocks right away. We go to our portfolio right here. And you can see I've already set this up to the Trade School Educational Series, and here's Microsoft and here's Google. So let's start with Microsoft. You can see we have two green trade triangles, meaning the trend is up and you should be long the stock. Google's a different story. We have one down and one up, meaning you should be out of the stock. So let's go with Microsoft first of all and show you the pattern we're looking at. So here's Microsoft, just a close-only chart going back to last August, and we'll put our trade triangles in. And you can see we had a trade triangle right here at 28.54, and we had a trade triangle right here. Now we use the trade triangles for trend and the weekly for timing. So here we are, long Microsoft at 28.23, and we have stops on this position at 27.95. So if the market's earnings come out disappointing, we'll be stopped out. Let's go take a look at Google, going back to our portfolio, and Google is just a little bit different. Take the monthlies, which goes all the way back here to August, 642, telling us the trend was positive for Google. Of course, it's moved up very nicely since then. Our trade triangles use weeklies, which is right here, weekly trade triangles, for timing. So the trend is up, we know, but the weeklies tell you what to do. So here's you buy here at 686, you exit here at 696, so you make a $10 profit, nothing spectacular. You get back in at 758, and then you get out at 801. That's about a $50 profit, and you're out of the market right now. So that's the key thing. We're out on Google and we're long on Microsoft. So as promised, here are the rules for the trade triangles when you trade stocks. First of all, the most important rules are the monthly trade triangles. They determine the major trend, whether it's up, that would be a green triangle, or whether it's down, that would be a red triangle. We couple that with the weekly trade triangles. So we use the monthly trade triangles to determine trend, then we use the weekly trade triangles for entry and exit signals. And how that works, if the trend is down, then we would only use a green weekly trade triangle to get out of a position. Conversely, if the trend is up, we'd only use a red weekly trade triangle to exit that position. All new positions are put on when the colors combine in the two trade triangles. That's it. Pretty easy, huh? Okay, so how do we do? Let's start with Google. Well, we show you the positions right here as we have. You know how the rules work for the trade triangles. So we had a gain of $9.14 on our first trade, and then we had a gain of $42.99 on our second trade, and we're currently positioned on the sideline. So our total gains were $52.13 in Google. Microsoft, which hasn't moved as much, really just two trades, and the first one was a loss of $1.13, which I think you'll agree is not very large, and the second one has an open trade profit of 57 cents. So a net loss on that position so far has been 54 cents, which is not too bad. So that's how you trade the trade triangles. So let's see how the results come out after the bell tonight. I'm Adam Hewison for MarketClub. I'll see you soon. Thank you for watching this edition of Trade School from MarketClub, where members profit.